Hey, good morning, everybody. I just wanted to get into some stuff real quick and show y'all a few things. Right here on the screen, we got Brad Garlinghouse. First steps towards institutional crypto products is to have trusted benchmark reference rate. Nice to see CME Group and CF Benchmarks collaborate on this for an XRP index. The market has spoken. So what I did was I took a look at this. I drilled down into this event. And let me show you what I did. You click this link and it takes you here. I was going into this and then I was reading this information and I didn't want to read it all. So what I did was speed it up. And I asked, what is the CME Group to Gemini? CME Group is a global financial services company that operates various derivative exchanges. It is essentially a platform where people can trade financial contracts based on underlying assets like commodities, currencies, interest rates, and stocks. And the key points about it is derivative marketplace. It's the world's largest and most diverse derivatives marketplace. Exchanges, it operates several major exchanges, including the CME, the CBOT, New York MEX, Commodity Exchange, product range, risk management, global reach, so on and so forth, right? So it's to help businesses and individuals manage financial risk through these derivatives, right? So I kept asking the questions, what are the important topics of this link in regard to the XRP, in regard to XRP? So I gave them the link to the CME link that I just opened up on the previous page. And this is what it said. New XRP and ICP benchmarks, CME Group and CF benchmarks are launching new reference rates and real-time indices for XRP and ICP. Here's the purpose. The benchmarks will provide clear and transparent pricing data for XRP and ICP, aiding in portfolio valuation and structured product creation, so on and so forth. The data frequency here is the reference rates will be published daily while the real-time indices will be updated every second. Very important. So it asked me, what would you like to know? Would you like to know more about how these benchmarks might impact XRP? This turned out to be a long conversation. So with Gemini, so this thing can give you all kind of information. It's kind of crazy, but I used it anyway. So potential impacts, I'm gonna just go over the bullet points because it's a long read, but increased institutional adoption, enhanced price discovery, right? This is for other companies. The real-time indices offer a more accurate and up-to-date representation of XRP's price, improving price discovery and transparency, et cetera, et cetera. Shows market maturity, risk management tools, and so on and so forth that this can be used for. So how the benchmarks work: data collection. CME Group gathers price data for XRP from multiple exchanges like Bitstamp, Coinbase, Gemini, etc. Price aggregation. The collected data is processed to create a single representative price for XRP. And so on these exchanges, typically you can get a 1 cent difference or half a cent, whatever. You see different differences in the price across XRP on these exchanges. So what this CME partnership is going to do is allow it to have a much finer, streamlined price for their bigger customers like the BlackRocks, et cetera. So benchmark calculation. The reference rate is calculated based on the aggregated price data and published daily. The real-time index is updated every second to reflect the most current price. So it says, would you like to know more about the potential challenges? Yeah, I ain't going through these challenges and stuff. I'm over the challenges. I think Gemini is a little bit behind, and Ripple and XRP is pushing full speed ahead. But it does make some valid points. You can ask Gemini for yourself, but I'm going down here. So I asked the question, does this mean XRP can trade as a derivative or actually trade derivatives on the ledger? So Here's the answer. No, XRP itself is not a derivative. Of course, we know that. A derivative is a financial instrument whose value is derived from an underlying asset. XRP is a cryptocurrency considered a digital asset in its own right. It's not derived from other assets. Absolutely. It did bring up something in here. I'm trying to remember if it was something I wanted to go by. Yeah, this is the summary. Here it is. We just go look at the summarized report. The XRPL has the potential to support derivative-like products. Hey, let me move my mic real quick so y'all can make sure y'all can hear me. Derivative-like products, but it's not currently designed for this purpose. All right. So anyway, I went through the whole gamut with what you call this thing, Gemini. Just asking a bunch of questions, doing comparisons and everything. But let me move on. Let me get to Twitter real quick. So we got Shannon Thorpe. She's talking about the same thing, CME Group parent company. She says, so CME Group's parent organizations is the International Monetary Market. Interesting. And then you can see she did CME Group parent company. She did a Google search. And this is what AI had to say. The International Monetary Market is the parent organization of the CME Group. Some of the largest shareholders of the CME Group include Vanguard, $1 trillion company, BlackRock, $1 trillion company. I don't know much about this one, but Capital International Investors, State Street Corp, JP Morgan Chase, who seems to have their hands tied up in everything, especially Ethereum, Capital World Investors. This is not small, ladies and gentlemen. This is huge. This is big. Let's go to the next one. This is from Smoke. Smoke is somebody I've been following on Twitter. This dude come with all the facts in America. So we got a few more links to go through, but we got some videos to watch. It's a lot of interesting information coming out of this, and you want to hear it all. So anyway, Smoke said Ripple Partner ISDA new platform common domain model CDM is designed to support DLT technology. Right over the target. The industry is looking at DLT, and some market infrastructures are on the verge of replacing production systems with these technologies. ISDA is currently leading the way in establishing a common domain model for derivatives. It gives a couple of documents right down here and highlighted. ISDA CDM is not smart contract nor distributed ledger technology, but it is designed to support DLT technology. If we go to the next page, check this out. The industry is looking to distributed ledger technology, and some market infrastructures are on the verge of replacing production systems. They talking about the traditional financial system. We're looking at replacing some of that stuff with these technologies. With that in mind, target IT platforms will be required to manage digital assets, execute smart contracts, and connect to nodes in various distributed networks to share or retrieve data. Ooh, that's a mouthful right there. That's a mouthful. We can get into the nitty-gritty one day, but y'all need to read some of this stuff and start getting familiar with these terminologies and what they're talking about. But it's big. So anyway, to continue on with that, he quoted himself in here. And he said, why XRP being added to CME Group's derivative real-time reference rate is very important. The derivatives market is the end game for value. Now, what he mean by that is it's a whole lot of money in some derivatives. And I want to show y'all a chart and a representation of that real quick. But I want to play this video. It's only about 1.5 minutes long. And I want to read the rest of this. Ripple and XRP aim to make the entire value chain more efficient with DLT, and that includes derivatives. In this video by ISDA, Ripple Partner, they describe how the derivatives market is on the cusp of a technological revolution while discussing their new CDM model built for blockchain. You got to listen to this. Here, let me... The derivative. Yeah. 1 second here. Let's get this
market. The derivatives market is safer and more transparent than ever before. But the infrastructure that supports it is complex, disjointed, and costly to maintain. Managing basic processes throughout the life of a trade is manually intensive. Each firm has developed its own way of describing common events, like trade termination, compression, or the exercise of an option. This increases the potential for inconsistencies between firms. Constantly correcting this is a big drain on resources and is not sustainable. Fortunately, new technologies such as distributed ledger and smart contracts offer the potential for greater automation and efficiency, reducing complexity and costs. But effective automation can only be built on standardization. If each technology uses its own set of representations for trade events, then we'll simply recreate the existing disjointed infrastructure. To realize the full potential of these technologies, we need a common representation of trade events. That's where the ISDA common domain model comes in. ISDA's aim is to create a comprehensive standard digital blueprint for how derivatives are traded and managed right across the life cycle of a trade. The ISDA CDN will enhance consistency across firms and platforms, providing a bedrock of standards upon which new technologies can be applied. The derivatives market is on the cusp of a technology revolution. The ISDA CDN will help realize that potential.
Look, I know I ain't made a video in a while, but I just want to say, I don't know, think of the biggest thing that ever happened in your life and multiply it times 100. That's what this is. Anyway, so there is some more here. No, I ain't going in that. I just
the derivatives market.
All right, so next link. In-depth explanation why blockchain companies will become the new most valuable companies in the world. Confirmation that blockchain adoption will be a great wealth creation event. Many people will make a lot of money. This is being said to institutional investors currently about the crypto market. Over the last 20 years, the companies that pioneered retail services on the internet, your Apples, your Amazons, Microsofts, created tremendous wealth and value to become the most valuable companies in the world. However, international finance and commerce are significantly, don't underestimate that right there, more valuable sectors. Blockchain being an internet-based technology and making this sector more efficient will generate historical returns. Listen closely.
So the companies that question, I do want to give you my perspective. So in terms of 10 years from today, we will be far more progressed in the digitalization of all of our financial and commerce transactions, and the financial world will have changed very substantially, and most of the investments that you and your clients are making will be running on digital rails. In order to accomplish that, we will have had to put in place new infrastructure that is blockchain based. And that's why the governments and the larger companies of the world are scrambling to get ahead in that regard. And a lot of disruptive companies are building, like Coinbase and Kraken and others already. So that's one thing. And so you saw that before with the internet. You know what that feels like between the years, say, 95 and 2005 and then 2010, you saw a dramatic shift in the way you communicated and shared information. And it's easy to forget that the Apple iPhone and iTunes and iPod, those things didn't even come about until like 2007, 8, 9, which was the end of the period I just mentioned. So you're going to live through that again. In terms of what does it mean for investments, because I think most of your audience help their clients invest, you're going to see the world's largest value creation event beginning to occur, because finance and commerce are much bigger than communications and content. So the companies that master this will become the future Microsofts, Apples, Googles. They'll become the world's most valuable companies. They may have names like JP Morgan and Visa, or they may displace JP Morgan and Visa, but either way, they'll be using this technology. And so if you have backed the companies that are making this technology available, you will be a beneficiary, and the value of those companies will go up very, very high, very, very rapidly. And it's already doing that. And I'll give you, let me just give you the examples right now. I mean, Coinbase is already worth 60 billion. Ethereum's worth 400 billion, but Ethereum, which builds software, it's a computer networking company. Its valuation today is only 1/10 of a Microsoft. It should be worth a lot more because Microsoft is a closed operating system and technology company. Ethereum is an open technology company and operating system, so anyone can build on Ethereum. The other thing your audience is going to discover is that a lot of people are going to make a lot of money because the returns are going to be so high. This is my expectation, but again, it's based upon the internet. The investors that made the most money over the last 20 years did it because they invested in internet stocks. And that includes Warren Buffett. Half his portfolio and most of his alpha is driven by his Apple stock, despite that Charlie Munger didn't want him and he didn't want to invest in technology. Well, for all of your clients, the same is going to be true. Around the world, most of the alpha will come from innovation and tech.
Yes. Okay. So I'm showing you this just to show you, in addition to the derivatives market, what the regular status quo is. What everybody is saying that is that DOT technology or blockchain technology is going to be huge. It's the second wave of the internet, right? And it's a big wave. So the next thing I want to show y'all is this. We were talking about derivatives earlier. Let me come back to derivatives, right? So I wanted to show y'all this is all of the world's money and markets in one visualization. Let me make sure I get mute. Okay, yep. It says comparing the world's money market. Okay, so right here you can see how this visualization works. Each square this size is worth 100 billion. Here's the context on each category can be found here. So for example, this is the silver market. It's only one dot. So that means it's 100 billion for the silver market. The value of the above ground silver stocks is 43.9 billion using 17.20 ounce spot price. Well, we know silver ain't 17.20 no more. It's about 30 bucks at the current moment. But either way, this dot represents 100 billion. I guess it's like estimated. They can't do a half a square. You can see one like this one. This is 3 squares. They represented by 3. Total of 244 billion at the time they created this. So this is cryptocurrency market right here. Wait, that can't be right. Oh yeah, you know what? This might be right. How old is this? It's from 2020, May 27, 2020. So this is a little bit older. But either way, you can see silver market is small, cryptocurrency market is small, military spending, we got about 10, 12, 15 squares. I'm pretty sure we're doing a lot more than this nowadays in military spending. But the idea here is to give you an idea of the size of the markets, U.S. budget deficit, coins and banknotes, right? This is for different countries, right? So Fed balance sheet, look how big this thing is. And then you go to the billionaires. Got quite a few billionaires out here. Look at these dummies right here. Anyway, these are the enemies right here. Every last one of them. Anyhow, gold. Gold is a huge market. They're breaking it down into jewelry and investments, whatever. Fortune 500, another market. Top companies right there, right? Then we got the stock markets. Look how many billions of dollars this is. It says it's $89.5 trillion in this market, right? If we keep going, we got the money supply. The money supply is pretty huge. 35, or where we at? Total value of the world's money is 95 trillion. Look at this. This is the global debt. Households, governments, all of this is just global debt right there. And here, check this market out. Global real estate. And before we keep going, this is huge. You can't even count all these trillions, 280 trillion. It's just too many, right? And these squares only represent 100 billion, and all these dang squares is just ridiculous, right? And one of the things I wanted to point out is that all these markets, every one of them that we're looking at, will run on distributed ledger technology in the future on top of cryptocurrency. So all those markets, those market caps will be coming here. Not all at once, but here a little, there a little. So let me go back down here because I wanted to keep showing y'all something, then I'm gonna move on to the last tab. So we got the global wealth right here in North America, Europe, and Asia Pacific, blah, blah, blah. And what have we been talking about? Here, let me read this. 63.8 trillion. And I don't know if that's the total global. Oh, here we go. Total right here. 360 trillion for global wealth. All that crazy money. And I wanted to show y'all this one. This is the one we just talked about right here, derivatives. Look at this goddamn market. Look how big it is. This is the notional value. This is low end estimate. 558 trillion. Watch this. Watch how long it goes. Look at this. This is what they're talking about. Look at this. 1 quadrillion high-end estimate. You got to go look that up to see what a quadrillion is. I think it's a 1,000 trillion. Look at this. This is ridiculous. Look at this market size. Coming to distributed ledger technology. This, all them hundreds of billions, well, I shouldn't even say that no more, trillions of dollars. Any cryptocurrency, if they get 1% of this market, game changer. I said 1%. Anyway, moving on. Oh, none of this is financial advice, by the way. And I think I played this one for you. Hold on, let me see. Yeah, I played that one. Okay. Yeah. All right. But yeah, that's all I have for you guys. I hope that was informational, and I hope that worked out for y'all. Hope y'all can get that and be blessed. Not financial advice, but now is the time. Now is the time to move. If you've been sitting on your hands, it ain't helping you none, saving dollars. We can get into it one day, but dollars don't do anything for you. They lose value. They will always lose value. They're inflationary by default. They have to be. Otherwise, the money system can't exist. I ain't getting into all the details, but do your thing. Go find out what those ISO 222 tokens are, and go get you some. Not financial advice again. Alrighty.